Sorry, we're fighting over the mute button there. There you go.
That's okay.
Yes, you were.
All right. Hey, Steve. How's it going over there?
Hey, Jamie. Happy Monday.
Yeah, you too. You too. You know, man, I thought we were going to come out of the gates gangbusters today, but the market was kind of sleepy, in my opinion, after the initial, gap up and slow grind back to where we were. But, hey, before we get going here, let me get the legal out of the way. Once again, I want to thank everybody for taking time out of their busy day to come here, Steve and I. But just want to make everybody aware of the fact that Trade Ideas is a publisher. So no content published as part of the Trade Ideas services constitutes a recommendation for any particular investment, security, portfolio of securities. In other words, everything that we share with you here today is strictly for educational purposes. So please, don't see this as a solicitation to buy or sell anything. All right, moving right along here. We're going to keep in tradition with doing the market recap and talking about how Holly did today. Probably one of the largest strategy collections that we've seen appear for a trading session. So as most of you would think, just like Steve and myself today, we were like, oh my goodness, today could be a big trade day. And then much to our surprise, it was actually a light trade day. So we'll get into the nitty gritty of that and also talk about the trade arounds and the things that don't necessarily show up in a back test. Then Mr. Gomez has prepared a nice little presentation on risk management that he's going to share with you. And then we've also prepared a nice list of limit alerts that we'll share with you guys, so that moving forward this week, you guys will have those alerts all good to go in your price alert windows. And so without further ado, let me just get rid of this, push it over, and get my screen pulled up here.
You want me to show my screen for the market recap?
Absolutely. Take it away,
All right,
Steve.
I'll do that. I'll grab the reins here, change presenter, show my screen, get rid of all my crazy stuff. Make sure you don't see my crazy stuff. I'm just kidding. So yeah, I've gotten in the habit of kind of leading off our endeavors here with a little market recap. It never really hurts to see where we've come from, where we were today, and where we might be going. Maybe even touch on some of the biases going forward. For those of you that have seen this chart from me the last couple times, you can see there is a white line above there, and that is a line of resistance, a brick wall above our heads. And this is the daily chart of the SPY. It's even made more clear if I go to a weekly chart. You can see how this upside resistance really is coming into play. So it kind of begs the question here, are we just pulling back to kind of work off some of that steam that we expended getting up 1, 2, 3, 4, 5, 6, 7 weeks in a row? We're just kind of chopping back and forth here. I've said it before and I'll say it again. I really do feel like this upside resistance line here is going to be tested at some point. I just don't know if it's going to be sooner rather than later. I don't know if we're going to take the direct expressway to it or if we're going to take the circuitous mountain roads to get to there. Maybe we can see a little bit more on the daily chart. If we go back to that, there's some things to pay attention to here. As I mentioned again last week, I think our trading range is definitely the upside of that line that I showed you. Is going to be a tough one to get through if it does get tested. The downside not only was a 200 level interesting in the SPY, which is right about there, but just above that we have the flattening out 200-day moving average. So this is kind of our range that we're working with right now. And I'm going to go a little bit deeper into the 10-period moving average. You guys have heard me talk a lot about the last couple of weeks, which shows a great guideline for a stock, indice, or whatever that's in motion, in trending, not chopping back and forth in a range sideways, but making a move, making higher highs and higher lows. Well, we've kind of petered out from that 10-period moving average. And not only that, the last 3 days have taken kind of an interesting look here. We can't get back above and close above our 10-day. We've tried a couple of spikes, but that doesn't make it in my book. I need to close above that 10-day moving average. So that really took my bias down a notch or two. And the 20-day moving average in red right below was also breached today. We closed on our lows and we broke both of these averages. Well, like on the flip side, if you turn this chart upside down, you heard me talking also a lot of these trend change lubricant setups. I really like to see, you know, some flattening price action, and I like to see that 10-day moving average holding the price underneath, kind of like a bird in the hand ready to take off. Well, in this case, it's the exact opposite. We have an upside down chart. We've got the price getting ready to smack the little bird that's in the hand because it's being held down from above. It's being very oppressive in its nature. It's not being supportive at all. So because of this little look here in the last couple of days, my bias has shifted to, I think we're going to pull back and test these levels again, the 200-day moving average and maybe even the 200 level before we go back up and maybe try again and work on that upper band. So like we looked at there in the weekly chart, I think a lot of this chopping back and forth is just trying to work off some of that steam that we gave off those bounce of the lows there in early February. But the way we've been closing here the last couple of days have not been some great close. You know, gone are these upward green candles we saw last week with just little tiny red consolidation pullbacks. Now we've had a couple good days here below the 10-day moving average, and I don't like the way that looks. You know, and again, these are just short-term biases. I don't know where the market's going to be 6 months from now, but you know, this is the range we're working with, and I feel like we're going to come back and test the 200 area and the 200-day moving average faster than we will, or before, I should say, before we turn back up and maybe test that. Let's just look at the Qs real quick, see if there's anything of note there. Same kind of issue there in a row, closing below the 10-day moving average in the Qs. You know, even look at the diamonds, same issue going on there. So we're starting to roll over and get some choppiness and some downside bias, in my opinion, different from where we were, you know, a week or 10 days ago. Before I go, if you do have the email for the trade of the week, we did something a little different this week. Me and the guys noticed over the weekend that we thought gold was going to have a really explosive Monday, and we wanted to participate in it. And I looked at, you know, some of the XAU, which is the gold miners index, looking like that. So we had that nice big bar on Friday. This is today's bar. But I was looking for some stocks that maybe quite hadn't broken out yet, and one of the ones I brought up was RGLD. It had this look right here, like we just talked about a minute ago, nice and supporting here over the last couple of days. And if gold was any indicator and XAU was any indicator, the way they went out on Friday, it looked like we were going to have a good day in gold on Monday. And those of you that saw, we did have a good day in gold. So getting back to the trade of the week, we put the trade of the week out prior to the market. It was put out at 6 a.m. West Coast, 9 a.m. East Coast time this morning, and it said in the body, we really feel like we're going to have an explosive move here today. So the trigger was basically buy on the opening print. Even if it does gap up, we expected some follow through, and we got some good follow through on that as well. So we're happy with the pick of the week. You know, not to mention a lot of the slim pickings in the other sectors, the oil sectors and financial sectors, they weren't really showing up. And, you know, coupled with some of the weakness we were starting to get in these higher levels, I thought maybe the gold sector could be a safe haven. We do not pick short sells for the trade of the week. A lot of people don't have access to short borrow lists, or they're trading out of their self-employed IRA account, and they can only go long in their IRA account. So that was some of the thinking and methodology and wisdom behind this particular trade today, and why it came out pre-market, because we didn't want to be riding this trade while the market was on. We had a feeling we were going to get this type of open and this type of follow through. So good on that one. Real quick before I go back again to Jamie, last week's trade of the week, IBB, had a wonderful week, but now we're giving it back, and you can see why I talk about not trying to chase a new entry in a stock after it's had 4, 5, 6 good days of a run. You know, you missed the train. Sit back and wait for a 2.0 to set up. Well, I think IBB 2.0 might be setting up, and it may be coming right in correlation with our lovely 10-day moving average. So you can see we kind of broke out from this level here, looking at a lot of tops and bottoms, and it's also corresponding right to where that 10-period moving average is. So what do we got here? About 270. I'm going to say maybe we're not going to set an alert in our price alerts today, but if you do have alerts set and you do have that functionality, maybe throwing in an alert at 270 below the current price of IBB might be a place where we can reload. And again, when those alerts go off, you know, it's designed to maybe put a little bit on the radar and watch it and see how it trades, see how it closes up the day. Ideally, I'd love to see maybe a push through the 10-day moving average just a little bit, and then a nice bounce with some green and some nice closing action above the 10-day moving average tomorrow. So hopefully we get that tomorrow, and it could be another setup for a reload opportunity to build a higher low here in the IBB. So that's it in a nutshell for a market recap. Bit of a downside bias here over the next day or two, I'm thinking, but this is our range we're working with. And I'm going to turn it back over to you, Jamie. I'll go ahead and change the presenter, and you just click OK.
All right, I think I should be back on. And Steve, the pattern that you just showed us was the old, prior resistance.
Becomes current support. Yeah, there was a lot going on there, that 270 level on that IBB, if that's what you're talking about.
Yep.
So I think it's definitely worth putting an alert in there at 270 and watching how it trades if it goes off tomorrow. All right.
All right, ladies and gentlemen, let us discuss how Holly did today, what she did, and, right off the bat here, as we saw, I forgot how many I had already. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 16 strategies. And Steve, I think that's definitely the busiest hopper that we've seen thus far. And if we just kind of come over here and sort these by whatever your favorite metric might be, I always like to do it by profit factor for some reason. You might notice a couple of strategies in here that you've never seen before. And that's because we're constantly working to develop new bases. And, as soon as we saw this, this collection of strategies, even when the computations were done Friday from Monday, we were all like, oh boy, Monday could be a real humdinger, with all of these strategies in here. And of course, from what we've, educated you guys on in the past about how the system works, just because a strategy is there's no guarantee that it's going to produce a trade because the specific criteria, have to be met. And even though we had this extremely large hopper of strategies in here, it was a relatively light day for Holly. We can see the trades that were executed, 1, 1, 1, 2 from here, which was fade the 52-week high, and then 3 from the support is that U under 20. And of course, we can see, didn't make a whole lot, didn't lose a whole lot today. We were down 29 cents after everything was said and done. But as we always like to point out, let's take a look, between the lines. What can we not see here? And in order to do that, we have to take a look at the trades on an individual basis. So let me pull my blotter down here. So this is the all trades blotter. And we can see here, 29 cents down after everything was tallied up here. However, our friend over here, the non-exit profit column. And before we move on to this little topic here, what is the non-exit profit column? It's just basically showing you, hey, if you did not exit this trade, this is what you would be up or down now, or, relatively speaking, whenever you're looking at it during the market session. And a lot of people might think, well, what's the big deal about that? And we kind of have to look into the psychology of we humans interacting with the markets. I can speak from experience, and Steve, jump in here if you, feel the same way. But let's say none of this exists, right? Or the non-exit profit column, or let's just pretend for a moment that Holly doesn't exist, and we had a stock on our radar for the day, and that stock triggered. And so we, stock ABC triggered, and we took a long position in it. And then it started moving our way, and then all of a sudden it started going the opposite way. It started moving against us, and we got stopped out of it. 99% of the time, before we had technology like this, typically what would happen is, okay, we're done with that one. I don't even want to see that stock anymore. I lost money in it, I tried it, bye. We don't necessarily sit there and monitor stocks that we no longer have a position in. Now, the non-exit profit just basically does that for you, as I'm sure you already know. But where can it really come in handy? And when we look at the non-exit profits today, let me just resort that again. So, okay, let's take a look at rare first. Long signal in rare generated right here. And then, of course, after Holly set her 60-minute hold time, ended up taking 44 cents on that trade. Now, some of you might have been done with rare after that. But, as we learn, to watch the new technology that we ourselves are implementing. Then we start to learn new little tricks that we can apply to this. So when we look at rare and we see Holly made 44 cents on her 60-minute hold time, and that was somewhere in this area right here. Let's see, what was that, 7:15, so 8:15, getting out right in the middle of this little choppy consolidation period. So a lot of you might have been, okay, maybe you followed Holly in the trade. And by the way, pretty quick fill when this thing came out. When I pulled it back up, I'm thinking to myself, well, maybe, maybe not. But one thing I liked about when this trade unfolded in real time is I pull it up, it's already wicked back up to here, but look what happens. A little green bar here, and then it comes all the way back down. So from my perspective, I'm like, okay, as it's coming down, if I don't see any risk of it breaking that wick right there, I might be comfortable either going long at this point or adding to a position if I've already, jumped in there with Holly. But when we see that little wick right there, that's definitely telling us something. So whether we went long in this one or we just put this on the screen to watch, we can always start drawing some lines straight across and go, okay, it was a little stretched out to the top, so if it went back to highs, maybe we don't really have an interest in it. However, looking at, of course we're looking at in hindsight here, had we stayed in that trade, we would have not made 44 cents, but we would have lost a little over $1. So moving forward, because the more we see things, the more we're able to identify them in the future and go, hey, this is kind of like that setup that Holly spit out the other day. Let me see if I can capitalize on this, whether or not I participate in the direction that she says or not. So it'd be real easy to go, okay, once we got out of this trade, drawing a line straight from here or putting a limit alert at the bottom of that wick there. So we could say 68.17. Come in here and say, okay, if the price falls, I might want to think about going short if it breaks out of that range right there. So it's real easy just to attach that, attach that note, lower range break, and then boom. If that thing does trigger, you're going to be alerted to it. You're going to be able to make that entry if you want to do that. So, as we like to talk about all the time, what is the strong suit of Holly? It's her statistically inclined or statistically oriented entry points, all right? Because, we have to keep her with short hold times because she has to be flat at the end of every day. So as we like to reiterate all the time, she was never set up to be a black box trading apparatus. She's the statistically inclined trader that goes before you. You can either participate with her or, wait for a different setup, but still pay attention to the stock that she has triggered because it's still statistically inclined.
Yep.
And it's really about the entry.
Just serving up statistically sound ideas.
Absolutely. So, that's one example in rare of the difference between Holly exiting at her time and staying in the trade. Very eye-opening today. And then, of course, we've got this little guy right here, Clayton Williams Energy, which was triggered right here. So, once again, whether you participated or whether you just put this on your radar screen to maybe buy at a later time of the day, if you did go long here and then you set the hold time and you took your hold 19 cents, so, what are we, 7.25? This is when Holly was getting out right here, 8.20 to 8.25. So once again, putting your trader's hat on, you're long here, it's doing the sideways dance. It hasn't really attempted to break those lows again. It's really easy to apply some risk management and go, you know what? It's kind of a lackluster day already. Holly's not Holly's not producing a whole lot of trades. So this one was statistically inclined. So you're in 200 from the get-go. It's always a good idea to maybe peel off of 100 at the exit time and try to hold the other 100 or whatever half of the allotment that you decided to participate in. And had you done that, there was really, of course we're looking in hindsight, but from any trader's perspective, there was really never a reason to get out of the trade. If you set your hard stop here, you never got punched out. And then, when it starts catching a little bit more traction here, could have easily stayed in that trade. And then, once again, we see a range break occurring. So, we could always draw this line straight across and go, okay, I'm already in a small position. And once again, one of the hardest things to do, especially in a day like today, is try to figure out, well, I've got a winning trade. When would be a good time to add to that trade? So, you can see these little micro consolidations here, which are the NR7s. So, those were going off all day on my screen. But this is really where it gets interesting, in my opinion, because classic range break, we just draw the line straight across from the high. If it is going to pop out, it has to crack a new high. So, we could have easily said, set a limit alert above the high of the day, 1595. Had a second opportunity to, participate in that trade, and, from the 16 level all the way up to the 17 level in a much shorter amount of time. So, these are the things that you can't see in a back test. This is what we call reading between the lines and capitalizing on the data that Holly is showing you. Now, let's see. On the stops that we took, it's also good to look over and see that the stops are doing their job. 30-cent stop, 89 down, 23.65, and a little bit more here. Now, while we're on the topic here, let's talk about these two trades here.
Mm-hmm.
Hey, as the trade of the week, points out, Steve.
We had a bias. We had a bias coming in today for a certain sector. Yes, we did, didn't we?
Absolutely. So when we saw, Holly trying to attempt to short a couple of the of those stocks on this fade the 52-week high strategy, what we have to understand is that those plays looked good from Holly's perspective, from a statistical standpoint. Of course, Holly didn't know that the sector is starting to perk up. So, once again, from a trader's perspective, if we see a couple of these fire and they're not working, it's like Holly's testing the water. She's like, okay, 52-week highs, these have been working in the past. So when you see a couple of these not work, then, and of course, coupling with the information that we filtered out in the trade of the week, and just, being, someone who pays attention to the markets, then that's also valuable information. Don't necessarily know if I should be shorting these. Holly's trying to do it. She's taken a couple of small losers. So maybe I should, pay attention to the upside breaks on those plays.
Yeah, I was going to say, if you guys are not visiting, or if you don't have a copy of the channel that is the sector channel, there is a great window in there which gives you a daily heat map, and it's one of the things I always first look at in the morning to see where the money flow is going and coming. And so if you're not familiarizing yourself with the sector heat map of where the strength is and where the weakness is, you got one hand tied behind your back, and you really need to know that. Let's use another example. Let's say you notice and you came in, the market's been open for 10 minutes, and holy shit, biotech is up 5%. It's killing it. And maybe Holly doesn't understand that biotech is the trade of the moment, because that's not what she backtests for. She backtests for statistical setups. She doesn't understand this difference between a gold miner and a biotech. But you, with your trader's hat, kind of need to know this stuff. So if you came in tomorrow and Holly had a couple of shorts set up, and you do your due diligence, and you check where the markets are going, and you check where your money flow is, and you see that biotechs are just killing it to the upside, and they're dark green on the heat map, well, then that's just one more piece of information. It's probably good to know when the gray box alerts of Holly come up as trade suggestions right off the bat. Both Jamie and I said AEM, no thank you. Newmont, NEM, no thank you, because we had a little bit more trader's hat understanding of what was really going on in the market. And again, she's serving up statistically sound ideas, but it always helps to really know, where these stocks are coming from. What stocks, you really should know, what stocks are in what sectors. if you don't have the ability to know that, free stock charts right off the bat gives you a great industry snapshot of every single stock chart. So you know it's an energy stock, you know it's a biotech, you know it's an airline or what have you. So again, if you're not doing that, get in the habit of checking the sector rotations when we first come into the market each day and find out what sectors are having money flow and what sectors are losing money on going out on sell pressure.
Right, and just being able to identify the stocks, what I did here is just pull up one of our single stock windows.
Yep.
So you can see as soon as we click on these guys, you get the full Monty. What sector is it in, where's it traded, everything is right here for you to see, firsthand.
But let's show them where that heat map is. Do you have a second to go to the channel?
Correct. Yeah, let me get a channel bar pulled up
so
here.
You guys are going to want to use your cloud feature. You're just going to want to go into the channel bar, which is functionality for everybody who has a trade ideas.
You're talking about the sectors?
Exactly, sectors, and the bottom left one there.
Mm-hmm.
That's the one that I have on my default layout. So you can right-click into that sucker and put it into your cloud and then bring it back up to your default layout and just keep it minimized like I do. It takes up a lot of space, but if you're minimizing it, you're not using a lot of space. And so right off the bat, you can see gold bugs killing it today, but not even close, up 6%. So if you have that kind of knowledge after the bell rings and 15 minutes to 10 o'clock East Coast time, Holly starts throwing you some ideas of going short some gold miners, well, you've already got this information that you know, and it might be a good idea to back off that selection.
Right, and just this chart right here is the perfect example of, something that's in play, big gap up, takes its initial run, then it settles back down into a range here, right? And so top, digestion. So once again, this is where the limit alert stuff can really come in handy, saying, okay, I know this is hot, I know that it's in play, of course, unless it was a daily setup, we're probably not going to be in it back here already. Of course, when we see these big gaps, we're kind of like, I don't know, a big gap up and then a run up. But typically those, the larger indexes and the larger stocks, they do it for a reason, So once you have something on your radar, make sure you're capitalizing on the price alert window to make sure that you don't miss out on anything. And this is one way that we can show you the hot sectors. Don't really have a lot of time right now to explain the other methodologies. Maybe if we have a little bit of time at the end of the
maybe Thursday.
Yeah, or maybe that might be a good topic for Thursday, because there's lots of different ways where we can find the phrase I like to use all the time is, let's find the party. Let's go trade where the party is, because there's really no need to trade anywhere else. That's where the follow-through is where all the people are playing that day, which we could reduce down into what we call volume. Okay, so Steve, you've drummed up a nice little piece on risk management, and before we get into that, just a little preface here. It's tying into these daily setups that we're showing everybody and that we're sharing with the limit alerts. Pretty obvious where the entry points are, but yeah. What about risk management? How much should I trade in a stock? What should, how much should I allocate based on, how big my account is, things of that nature. So Steve, I'll just pull that slide up over here.
Sure. When we do these webinars, we're seeing a lot of questions. We see a lot of email questions come through to info@trade-ideas, and one of the more common questions was, well, how much should I be risking in each trade? What account size do I need? How much should I be? How do you know when to get out? What are your stops? And I understand that that's a whole range of new topic to a lot of people, and so I took that to heart and decided to just put maybe a little 5-minute presentation on some good ways to create some rules and how to really understand risk management. And I'm going to use an example size here because it doesn't really matter what the size is of your account. However, if you're an active day trader, you probably know that you do need at least 25K in there to have the day trading margin buying power satisfied. So a lot of people might pad it with 5 and have a $30,000 account. So let's use, for the sake of an example, a $30,000 account, and we can go through and we can work backwards here on a couple of issues and kind of reverse engineer a way to get some of the answers that people are asking about. So just a couple of notes there. Yeah, 30,000 account. 1% is a good number that I think nobody should ever risk any more on any given trade. You know, the whole idea is to live to fight another day. If you're just going to jump in and start, you know, giving yourself $5,000 downside days on a $30,000 account, you're not going to be around here very long, especially for the new traders. You guys are going to lose money trying this. You're not going to come out of the gate and just make money right off the bat. It's going to take a few months. It's going to take some cuts and some blood and some sweat and tears. But along that time is determined how much, you know, you give away in the process of your learning curve. We call that your tuition. And so we want to keep your tuition as low as possible. And one of the ways to keep your tuition to trading as low as possible is to never risk more than 1% on any given trade. So with those numbers, we've got a $300 total stop loss commitment to any trade going forward. So we don't want to lose more than 300 bucks if you got a $30,000 account. Very simple math, 1%. Now, when Andy and I were trading the Ditto Trade account, which was a mirrored account, which in other words, when we pressed a button, we had active accounts attached to our account and everybody participated in the same block trade. And we were very mindful of how much of, each trade was going to be risking because we were on display, and if we were going to get out of control, people were going to call us on it. But one of the things we told people was when we do decide to take a trade, a 10% allocation of your total account towards a trade was probably a good medium size, but a 20% of your total account would be a pretty good chunk that you had some really good conviction in. So, allocating $3,000 to $6,000 per trade of your total account, based on the share count that you'd have to calculate. So here's where we work backwards. The first thing you want to do is not say to the market, okay, market, Mr. Market, I'm in this trade here, and I'm going to go ahead and risk 300 bucks, no matter what that price is. As soon as $300 hits, I'm out. Well, the market doesn't care about your 300 bucks. What the market cares more about is technical levels of support, supply and demand, pivots, resistance, etc. And so the first thing we need to do when we're thinking about entering a stock is, yeah, the entry is easy. It's probably close to here where we are currently, but where's our downside? The very first thing you guys need to do is identify the first technical level that makes sense of where you'd want to ditch that trade. Below a certain level plus a little slop to try and maybe not get stopped out by the predatory stop hunting algos. But you always have to have a technical level and make that your level to get out. Not just because I have a certain amount of shares and once I go down 300, this is when I sell. That's reverse thinking. We don't want to do that. So once you've identified that technical level that makes sense for you to cut the trade loose as a stop, that it's no longer working and doing what you hoped it would do, you want to rip the Band-Aid off and move on to the next trade and shake that one off. But what you got to do is say, okay, well, if this is 50 cents lower than where I am right now, if I buy 500 shares, that's going to be 250 bucks probably. So my math probably isn't perfect off the top of my head because I'm trying to convey this to you, but reverse engineer it in your head. Find out how many shares at the current price minus the stop loss price and how many dollars or cents that's going to be. How many shares is that going to equate to where that does not exceed your point of paying 1% risk, in this case $300. So once you've figured that level out, have some more rules that you might want to give yourself. On the bad days, you really should have yourself a daily loss circuit breaker. If you've had 2 or 3 bad trades in a row and you hit your stop loss in all 3 of them, that's a lot of money. That's 900 bucks. I mean, give yourself a level that you will faithfully turn off the computer, get up and walk away. Because what happens is, and you guys, you've all been there with trading live money, your emotions start to get the better of you. You take a few punches in the face pretty quickly and you're back against the corner, and you're starting to think about, well, how can I make this day, turn out positive? And you start throwing haymakers and you start swinging for the fences and you start breaking your rules. That's when you get really in trouble and you wind up doubling your bad days. If any of you have traded for a prop shop or a prop trading firm, you'll know right off the bat that everybody has their number. That number is supplied to them and given to them by the manager, where the manager tells the risk manager, look, if this particular trader gets below $800 P&L today, cut them off. Because more often than not, these traders don't always have the self-discipline to cut themselves off, so they have to be cut off externally. So know what that level is for you. I don't really necessarily have a good thumbnail for that level, but you guys should know what that level is. And then on the flip side, have a circuit breaker for your good days. And I've talked about this one of the first times I came on with Jamie. I talked about the 20% rule that I've used over the past. Let's say a good day to you, and your good day should be at least twice or 3 times what your downside circuit breaker should be, just like in sizing a trade, risk management and trade, maybe 2 to 1 or 3 to 1. But once you hit that level, and Barry does this all the time, if you guys hear Barry in his room, you say, well, my day was just made, when you have that feeling and you've hit that target and you've hit that number that you would love to see, you got to protect it, but at the same time, you don't want to shut it down and walk away because you're seeing something, you're doing something right. So give it a 20% pullback, call it like a pullback stop. Say you're up $2,000 on the day, well, 20% of 2,000 is going to be $400. Give yourself $400 to keep playing with the rest of the day. Try and turn that 2,000 into 3,000, maybe even more. But once you hit that trigger of 20% pullback from where you were on your highs of your day, which also should correspond to what your upside target should be for the day, that's when you got to shut it down, turn it off, and go home a winner. There's an old great book, The Art of War, and one of the chapters is reward the troops, give them a fresh shower, give them a hot meal, give them 10 hours of sleep, let them know you appreciate them, and let them, take in the spoils of victory. Because there's really nothing worse than hitting your upside target and then giving it all back. That's no fun at all, and that does not help an account grow. So these were just a couple of ideas that I've used over the years as rules, and then of course also trying to answer the numerous questions we get as to how do you determine where your stop loss should be? How much do you risk in every trade? Well, these are just some guidelines, and I know a lot of traders that adhere to the same type of guidelines, so that's why we wanted to share it with you guys.
Sound trading advice indeed, Steve.
Right.
All right, so tell you what, let me just flip back over here before we proceed. And just wanted to make one more comment about the non-exit column, which we see here. Just one more comment about it. The beauty is in the simplicity. Just like my friend Albert Einstein and his friend Leonardo da Vinci said, simplicity is the ultimate sophistication. And boy, does that ring true in the markets. So if you haven't been paying attention to the non-exit profit column, do it. Just do it. Just get in the habit of watching it and see what happens. Okay, so now it's time to go over the limit alerts that Steve and I have prepared for you guys today. So Steve, we want to look at charts over here, or do we want to go back to your screen, or you tell me.
Let's look at charts on the free stock charts, because when we wind up getting our moving averages, we will be focusing solely on our moving averages. So if you want, I can take the screen if you want, or what do you want to do?
Either way is fine. Here are all the alerts right here. So we can flip it back to your screen, and I can, when we're done here, I can simply cloud link for these 10 new alerts, and we can pump it out over the chat mechanism.
Yeah, let's do that. So let me grab the screen sharing here. All right, I cannot see your screen anymore, so go ahead and tell me what's first.
All right, first on the list is My Man Hank. Oh wait, that's a different song. Okay, let's see. Number 1, CPLP.
Okay, well, where do we have our alert set on this one, Mr. Jamie? I think we have it set at the top of today's wick. Is that correct?
359.
Yeah, okay. So what we have here, again, the brand type analogy. You got that nice 10-day moving average supporting price numerous days in a row here. Always what I want to see. It gets my bias in the right mind. We have a nice close above the 50-day moving average. Nothing much really to talk about there, but the price did move but got ahead of itself. But I still think this is a trade that is in play, and that wick is just under this high over here. So what we did is we went ahead and put in the high of the day plus a penny on this one. 359, is it, Mr. Jamie?
Correct, 3.59.
Okay. So CPLP has that look that we've been focusing on for the last weeks here, the trend change lubricant look. If you short this stock, you're not going to be liking it because it's not making fresh new lows. It's trying to dig in and make higher highs, and it just has that nice look about it. So we like that one. We're going to add that to our list this week. And again, when we're finished here, Jamie is going to have the cloud link of these active alert triggers. So those of you that do subscribe to the higher functionality can grab that link and keep an eye on these same triggers that we're using and talking about if you're so inclined. What's next?
Next we have LGCY, Legacy Reserves.
Legacy Reserves. All right. Now I think on this one, we don't want to be the person chasing two giant green bars, not to mention a couple more down here. So we're looking for a pullback alert on this one, aren't we?
Right about the 120 level.
120 level. Okay, now on some of these, I actually went back to the 15-minute chart to try and see intraday. What would be the most interesting place that they would try and shake us down? In this case, I think they're going to try and shake down the entire move of today at some point, maybe try and run the stops under the low of today, and that's right about here. What do we call it, 120?
I have 1.2.
120. Okay, so right about here. To try and here's the end change for today. I wouldn't be surprised to see maybe an opening rundown. And again, you guys, when you see any of these pullback alerts trigger that go off, if they're going off in the first 30 minutes of the market, give them a little extra weight and consideration to do what it is you want them to do, because more than likely the price is just trying to get down there and tickle that level, and more often than not it does it in the opening drives, the opening ranges in the first 30 minutes where the algos are scooping up all the overnight stop orders and market orders and what have you. So again, if you see these pullback alerts tripwire in the first 30 minutes, give them even more weight to the trade.
Right. And Steve, the way Steve and I were looking at these, where to put the prices in, you kind of have to pretend like you're long and go, okay, if I was long, where would I put my stop loss?
Exactly.
And then go a little bit further down. Right, Steve?
Yep.
Okay.
And then important again, these pullback alerts are not gospel. They're not pull up your account and buy as quickly as you can with both hands. No, it's watch the price alert down here. Did it just do a big spike in a wick? And it looks to me, it looks to you like, hey, those people just got ran out on stops. That sucks for them. Well, that's your opportunity to jump back in after some of these setups that we're showing you here. So we're not going to be the ones buying, big breakouts like this, because we've had a lot of good run down here from 90 cents all the way up to almost a doubling, $1.60 or so. So on that particular one, $1.20 could be a pullback alert. It might happen tomorrow. It might happen the next day or even the day after. Who knows? But that's the thinking on that one. And we do have a lot of pullback alerts today because we really didn't feel like we had a good setup, buffet, if you will, of a lot of good ones that are ready to trigger from underneath and run out and break out. So we're looking for more pullback alerts today. What else we got?
Right, next on the list, David Sam X-Ray, DSX.
Okay, one of the shippers. Yeah, one of the shippers we've seen, actually I'm just curious what Dry Ships is doing, because Dry Ships is kind of the leader. They're not doing a whole lot at all. It's kind of an ugly chart. So that, there's a little bit of a warning, but Dry Ships, Diana, Dirty Diana, we used to call this one. I'm thinking that we put in a pullback alert on this one, what, around 285?
Yeah, we've got the DSX at 280.
Close enough. All right, let's look at the intraday 15-minute to see if we can figure that out. 280, okay, I see what I was looking at here. This level right here was where, not today, but on Friday, the buyers stepped in and held a pretty good level at 280. So, we're halfway back to this level, and it's definitely above the level it broke out from. So this could be a level, if I was looking at it, saying if I wanted to be really dastardly and I wanted to try and shake people upside down and get the coins out of their pocket, where could the market take this to? And I came up with 280, and so did Jamie. We agreed. So we'll go ahead and stick with that.
All right, and next on the list we have Nancy Mary NMM.
NMM, just those two? Yeah, okay. I'm thinking probably right down here. We had a pretty big wick today, almost all that was closed up. I'm thinking they're going to try and come back and take it to the low end of this prior day candle. Let's go to our 15-minute intraday and see. Okay, I'm seeing this some pretty solid buying right here. They stepped in. This is kind of where I had it on the daily chart. I'm thinking like $1.44 is what we were talking about, right?
That is $1.43 actually.
Well, we're going to go a penny below. Okay.
Mm-hmm.
So again, a pullback alert to watch and see how they trade. Again, you had a move from down here all the way up here. We don't want to be this person chasing and getting stopped out. But looking back, where would you try and really create fits? I'd say right around here is a good looking area. That's where we are, 143.
Yes, where the fits will be created.
The
I
fits
like
will be
that.
creative. Yes, many fits will be thrown. And again, we're starting with these setups based on the daily chart, but we're going internally here and looking, trying to look inside the guts and see if we can get any more areas for good pullbacks, because those are especially warranted on the pullback ones. What areas are they going to try and look for to run the stops? What's next?
Right. TK. Tom.
Okay, another shipper. So this is similar to Diana, DSX. So similar shippers. Again, dry ships was once the leader. I'm not really liking that, so that gives me a little bit of a bad taste, but we'll let the price action speak for itself. Once again, we're above our, only a couple days above our 10-period moving average here. We didn't really spend much time above it. But nonetheless, let's look in the 15-minute here and see if we can, it looks like a ton of buyers showed up right here at 880. So I'm thinking this is kind of halfway off that move. Good pullback would frustrate the buyers who bought lately. I'm thinking we did probably a 879, something like that. What'd we do?
On the TK, we got an 882 working.
Okay, close enough. So that's the general area. 882, probably corresponding back here to this high-ish. All right, so another shipper to keep an eye on, and again, if the alert goes off, don't buy it with both hands as the gospel. Watch the price action and see if it starts to build a base again. What do we got next?
George Clooney, CLNY.
CLNY. Now this one it's a little different from the other ones. We didn't have any run and pullback and spikes, so I'm guessing on this one we're waiting for a breakout. So there's not much really to look at for a pullback here, but there is a high of 1681 there. Okay, it broke out barely at today, 1685. So I think that we put a high at today's candle, 1686.
Correct.
Because it looks like there could be some run, and then if you get hooked up and it does start to run, the next level of resistance to watch is going to be up here at this 1740 level with these two days. So could be an early look on this one, and that could also be the kind, if you hold on to it and you're watching at the levels up here, you could also add to it if it breaks above. But not much to go on here on a pullback other than today's high was a nice little breakout from this high, and so we'll use today's high as the trigger. What next?
Moving right along, we have WMB.
Oil company, oil energy. Okay. So really solid base down here at the 1450 level. It just can't seem to get any lower than that. However, we did have 1, 2, 3, 4 days of green. I'm thinking we have a pullback alert on this one. Am I correct?
That is correct. Mm-hmm.
All right. So if we go into the guts here, maybe they'll try and shake it out just below this gap open here. That's what I'm thinking. So maybe something like 1650.
Actually, 1669 on this one.
Okay. So we're using this little hitch, it looks like, here after the open. Let me zoom in so you guys can see. It looks like we're using this here. So very close to the low end of the day, but again, if we can come back, and it corresponds, as you can see, perfectly with this high 2 days prior. So we got ourselves a nice little pivot level here. That was the thinking when Jamie and I were doing our homework. So again, the pullback to this level, watch how the price trades if it gets back there. But looking at the daily, hasn't had too much run, so we don't want to get too greedy on a pullback. So that's why we stuck it in there at that level, I believe. All right, what's next?
This next one's the last pullback. It's SWIR, SWIR.
Sierra Wireless. Okay, Swirly. Swirly did a nice little job staying above its 10-day moving average. Didn't close below here, stayed above. So it's nice daily, a bird in the hand, starting to take flight. But we're not going to be the Johnny-come-latelys chasing the train after it left the station here. So I'm seeing on the daily a pretty definable pivot. The top here, top here, top here. So I'm guessing that we used that line around 1470.
1472.
Perfect. So there's the thinking on that one. Once again, a pullback. Using the daily chart here for more of a definitive level of pullback, seeing that pivot level, 1, 2, 3 highs. So like Jamie mentioned earlier, we always talk things could become current support, and that would be a great place to bid in and not be the person that chased the train too late on this particular setup. What's next?
Next is actually not a pullback alert, MITT. It's a lower, yeah, MIT.
Okay.
It's
This
a
one
lower
does
volume
have,
stock,
yeah.
but it's also got a low float as well. And we all know
Okay.
what happens when those things take flight.
Yeah, we wanted, Jamie and I try to remind ourselves when this one came up, we really like the shape of this, but I mean, let's go look at the volumes here real quick. 300,000 today, 120, 120, 103, 150. So this one does have the propensity to be a little lower volume. It's not quite averaging 300,000 shares a day, but if you catch it on the right day when it's in motion, you get some extra special sauce on it. Now, we do like this really tight range here that you can see. So there's no reason really for a pullback on this one. We're just going to use this interim range, kind of like the last chart. The high of this candle, this candle, this candle. The high of today is 1310, 13.8, 13.8. So we're going to use the high of today's candle. If we break back above today's high, it looks like, right? 1311.
Let's see, on the MIT, we've got 1329 actually.
Okay, so we're not going to go for the head start on this one. Okay, this one is so tightly wound, there's really not much distance between these levels and these high levels over here, so I guess we're going to wait for this one to get a little head of steam and go ahead and break out of this entire congestion. That was the consensus thinking on that one. So what'd you call it? 320?
1329.
1329 is going to be the breakout on this one. And you can see sideways action is great. We're consolidating over price rather than pulling back over time, which builds a lot of potential energy into that coiled spring. So hopefully, being a low floater and a low volume, you know, this one might have some follow through if it does get going.
And last but not least, APLP.
Alpo. All right. Well, again, we've had a couple of good days getting up to this level. I'm thinking we're looking for a pullback. Is this a pullback alert or not? I think
No, it's from below, yeah. Mm-hmm.
Okay.
This is not a pullback.
All right. Where do we have this one at today's highs?
1150.
Okay, so we're going back here to these prior highs. Today didn't quite make it. It got a high of 1140. You know, this range is rather, it's not huge, it's not tight. You know, we're not chasing a move like these bars back here where you can see we're still working that move off, but we may be ready to work this big move off that we had and move higher back through highs again. So that's the thinking. Not much higher than where we were today in today's highs. So okay, there's your list.
Yep, and I just sent that out over the chat functionality, so everybody should be able to pull that cloud link right from there and load it up. It'll automatically add all of those price alerts to your price alert window.
Yep, well, I'm passing the baton back to you. If we've got anything else we want to talk about, and maybe have Scott come in and show them how to get some great discounts if they haven't purchased some of this functionality yet.
Absolutely. I think that's, you know, we're about 5 minutes away from the top of the hour, so probably a pretty good time for Scott to come in and talk about the coupon codes that we make available to our webinar attendees.
Yeah, all right. We'd probably just start with explaining to anyone who's not a subscriber what our pricing's like, and then I'll do that. But if some of you want to preview, I want to direct your attention to the handouts panel on your GoToWebinar interface. You can download a PDF right there that's got the product codes I'll be talking about in just a moment. So we're a software as a service company. Our core subscription is a monthly $99 subscription that includes all the real-time data and exchange fees, full customer support, full hour of one-on-one training, the charting. You're able to test our backtesting tool. Of course, the annual knocks that price down and saves you a bundle by being only $888 a year. And there's no contract with either of these. For access to the higher functionality of Holly, the AI, and our price limit alerts, all that good stuff, and being able to backtest in the market without doing any programming, optimize your own strategies, and use the AI, that's a one-time $1,100 cost. It's a lifetime license. All you need to go along with that is an active subscription, and you've got all of our new stuff moving forward, even in the future. Now, on the next page, we have a product code for you that's good this week until Friday, end of business, and it's Holly13. Needs to be all caps. They are case sensitive, but what that lets you do is save half off your first month. You know, I mean, what could be better than just trying us for under $50 for the first month? You can get the training. You can cancel if you need to, but why would you? You can then save money by changing your monthly subscription to a yearly subscription and get that for just $710 by using the 20% code. By using this code, it takes 20% off the year. So if you're already on the monthly subscription, just switch over to the year, saves you a whole bunch. To get the AI odds maker, it takes 30% off of that. same code, 7070 lifetime. So to make it easy for you to upgrade to get the year and the full thing, we put them both on a combo page, and if you go to the link on that handout, bit.ly/AI Holly, all caps, it just makes it easy for you to get there because the regular URL is long. Use the same code, Holly13, 20% off the year, 30% off the AI. Takes 508 off of your subscription and the AI immediately, so you get everything for $508 off. So that's only $1480 total instead of $1988. You're set for a full year, and then you renew at $888, even if we increase our annual rates before then. It's a fantastic value. I want to thank Jamie and Steve for putting on a really informative webinar today. We'll be having the QA webinar, TOW webinar this week, and also the trading studio on Thursday. So when you see those emails asking you to sign up, be sure to, because that also lets you get access to the recordings as soon as they come out. Thanks, guys. Thanks, everyone. Anything else? Good. All right. Goodbye.